Hey everybody, Tim from Alpha Wolf Trading coming at you with another CEO interview. Very exciting company. Been looking forward to doing this interview. I am a shareholder, and actually probably at the levels that it's at right now, looking to potentially add back to my position. I did sell some on the recent pop. I had to do it, Jeremy. But
That's okay. There was a lot of liquidity that day.
I'm going to get back in there. This is Perimeter Medical Imaging. Jeremy Sobotta is the CEO. And if I'm not mistaken, Jeremy, this is your first go around as a publicly traded company CEO. Is that right?
That is correct. Yes.
Yeah. And we're gonna find out from you what have you learned from that experience so far. But Jeremy, thank you so much for coming in. I'm not going to go into what the company does. I'm going to let you describe that. But before you get into that, why don't you give us a little bit about yourself and how you achieve this role at Perimeter?
Yeah, definitely. Thanks for that, Tim. I've been in medical devices my whole career. I'd say kind of leaving grad school, I was, a classic MBA, student thinking about, do I go, more of a generalist consulting banking kind of route, or do I really go deep on an industry? And for me, the answer was pretty clear. I wanted to be somewhere in life sciences. Born and raised in West Michigan, it's a big hub of life sciences there. And I decided to double down on med tech, which was one of the best decisions I've ever made in my career. So I started my journey with Stryker, and if you're familiar with the organization, very diversified from a medical technology perspective, and very decentralized. So spent over a decade with them, which was one company, but it might as well have been 15 different companies that I worked for because of their, fierce decentralization. Spent about half of that time overseas, which was great because I, got to experience different go-to-market models, different healthcare payer provider models. Lots of different challenges being in emerging markets. I spent, some time down in sub-Saharan Africa, responsible for that business. So, as you think about obstacles to overcome, you name it, I was thrown to the fire, and actually was very fortunate to have some mentors and sponsors throughout that time that gave me jobs I probably had no business being in throughout that period, and I learned a ton throughout that. Also, when I left Stryker, I was head of finance for their surgical business unit, which was a high growth, very profitable business unit. I kind of describe it as pretty much everything in the operating room, but whatever's being implanted in the patient. And we were really going hard at having our surgical technologies business kind of be the anchor for women's health within Stryker. We had just completed an acquisition called Invuity, which was lighted retractors and different energy sources for breast surgeons to use, among other surgeons. And what I was constantly hearing from the sales force at that time was, we need something to help us solve margin assessment. Our customers, our sales reps were saying, this is the holy grail of breast lumpectomies. So looked at the space pretty heavily back then. Didn't like anybody I looked at back then, and my career journey moved on from there. I spent some time with Smith and Nephew after that, which was in their orthopedics business. So kind of moving from everything around the implant to the implants for me, and that was an exciting stint. Great product portfolio in that organization. Really doing some big things in the robotic space and going after the ambulatory surgery center with some lower cost computer assisted surgery technologies and things like that. So got some exciting exposure there. And then the Perimeter opportunity came across my desk. So, having it was a pretty easy conversation once they told me what perimeter was solving. So you didn't have to convince me that intraoperative margin assessment, particularly in lumpectomies, is a big thing to fix. That customer surgeons are eager to have technology to help them fix it, and hospitals are willing to pay to have somebody help them fix that. So really did some diligence on the technology, reached out to my KOLs and thought leaders, and was particularly excited about the way perimeter is solving the technology, which we can get into later. And from a Jeremy profile matching with perimeter profile, it was exactly the opportunity you talked about earlier, Tim. It was, take the company public, get my first Pubco CEO experience. And, what I would say is where perimeter was, they were right at that transition from finishing up on, at that time, kind of 7 years of nothing but product development, and now trying to figure out how to get this technology out in the hands of surgeons and really begin impacting patients' lives, commercializing it, and going through that process, which is, what I would say I've been in organizations that do that better than anybody in medical devices throughout my career. So, what a great match to allow me to personally grow and learn through that Pubco experience, but also bring what I have been doing for the last, decade plus in my medical devices career to perimeter. So, classic match made in heaven, if you will.
So, yeah, I like the medical device space much more than the actual like biotechnology space, right? Because you can get all the way to phase 3 and then have it blow up in your face, right? I mean, you get the 510K clearance, we're good to go. Your product is good, right? And now we can go out and sell it. And if it makes a difference, if it is superior than what's out there, then it makes sense to me that it's just a matter of time that it gets accepted, right?
Yeah. So yeah, go ahead.
Go ahead. No, go ahead.
I was just going to say, we're not only swinging for home runs. We, in medical devices, we're fine with singles and doubles to get you there. You still put points on the board, right?
Absolutely. Okay, so let's talk about what exactly perimeter does, or what it provides at this particular point in time.
Great. So actually, just you touched on something that's very important to our story as well, and that is we are already cleared to market. We're commercial stage on our flagship product, which even rewinding 12 months, that was part of, again, part of the reason I joined Perimeter, but also part of what makes us so exciting is we have that de-risked part of our story that is nothing but commercial execution. So if we can execute commercially, we're through the regulatory hurdles on that front, you've got a winner. And what we do is we solve a problem called intraoperative margin assessment. So in a solid cancer surgery, we'll talk about lumpectomy because it's pretty easy for people to follow. When a surgeon removes that tumor specimen from a patient, in the normal standard of care, the pre-perimeter standard of care, they would send that tumor specimen to a pathology lab. And what the pathology lab does is they, put that specimen, they sample the specimen and put those samples under a microscope. And they're looking for any cancer that occurs that is present at the outside edge of that specimen, at the perimeter of the specimen. If they find cancer in the edge, it's called a positive margin. And what that means for patients is their risk of cancer coming back effectively doubles in the case of breast lumpectomies. So instead of accepting that risk, a surgeon would have that patient come back for a second operation, sometimes 3 operations, and they would go back in and take additional tissue. Sometimes it's just another shave where they take a little bit more tissue. Sometimes they would say, sorry, patient.
Which is costly, mentally draining, I have to think, right? I mean, you go through this to begin with, right? Which is a whammy in the face to begin with. Then you got to go through a surgery, and then you got to be told that you got to go through another surgery or maybe another surgery. And that's got to be just depressing, right?
Yeah, it's funny. So one of our key opinion leaders, Dr. Beth Dupree, something she said to me pretty early on that was very, very striking was, I can cut out the cancer. That's not, that you can do. But when I really begin to impact patients is when I can cut out the fear. And that's exactly what we're trying to do with Perimeter, is give both the surgeon and the patient the confidence that they got it right the first time.
Right. I mean, that to me would be invaluable, right? I mean, if I have a choice between this procedure here where there's a 60% chance that I'm going to maybe have to come back and do it again, or I can do this over here, it's going to cost me more. I don't give a crap. Give me this one over here. Right?
Definitely. Yeah, 100%. And, so in the case of lumpectomies, it's a second operation. In some of the other solid cancers, like take pancreas, for example, it's a significant impact to your survivorship. So in breast cancer, survivorship is pretty good in general. We're very fortunate to have that. But so what we try to focus on is what I say is the quality of survivorship for breast cancer patients. Now, in the case of a pancreas cancer patient, if there's a positive margin, your 12-month survivorship is basically cut by 2/3. So you're 1/3 less likely to survive, actually, which is obviously invaluable. So
Right. Okay. So let's talk about exactly what it is that it's doing here. So this is gold standard postoperative histology tissue assessment, right?
That's right. That's
Okay.
exactly, yep. So that's what I was just talking about. So today, the patient and the surgeon are waiting a week for pathology to give them information like that. So if you look at that slide, that dark purple circle you see at the edge of the specimen,
Right
that is breast cancer at the perimeter. That's a positive margin. So in today's world, that patient comes back for a second operation. Now, what Perimeter is doing is bringing that microscopic level resolution into the operating room. So that's the same piece of tissue you see there on the bottom left side of the part of that slide, with our technology instead. And you can see the same breast cancer at the margin there. And what that, in our world, what happens is the surgeon sees that during the operation, says, uh-oh, I've got a positive margin. I need to go back in and take a little bit of additional tissue. So that, they'll say, all right, that was the, medial side of the specimen. I need to go back into the patient and take another shave from the medial side of the patient's cavity until they achieve that clear margin.
And this is 5 to 10 minutes.
5 to 10 minutes instead of 2 to 7 days, right? So yeah, so what you're avoiding by doing it in the first operation is a $16,000 reoperation cost per patient, a 50% complication rate. So, poor cosmetic outcomes, pain management, surgical site infections, hospital acquired conditions, all of that stuff that is a huge risk for providers and surgeons can be avoided by not bringing them back in for another operation.
Okay. This is all the equipment here.
That is correct. Yeah. So the 3 left pillars are what we have on the market today. So, one of the differentiating factors between our product portfolio. So what we have today is called the S series. So this is the unit that goes into the surgery suite, S series being surgery series. So what that is, that's 510K cleared for general tissue. So it's cleared for the evaluation of human tissue microstructure. So we could use it on a breast cancer surgery or a colorectal cancer surgery, any of that stuff. And there's that capital unit that sits outside of the sterile field in the operating room. And then that specimen immobilizer is what really drives our recurring revenue. So that can only be used once per patient. It adds a ton of values. Part of what's great about the way we're solving the problem for surgeons.
Are we talking about this right here? These little,
yep.
Okay.
Yep. That middle dish there. So basically what happens, the surgeon removes the tumor, they put it in that dish, and then they drop the whole dish into our capital imaging unit there. And what's so special about that dish is one of the couple of key components of what we're doing is we cannot destroy the specimen. There's still postoperative pathology that is done for other reasons other than margin confirmation. So we need to make sure that specimen stays intact. And then from a clinical decision-making process, it's very important to maintain measurements on how far away from the perimeter they do do or do not find cancer. So if you just kind of pancake that specimen, then everything would be at the margin.
Right.
So we have a very gentle distributed pressure that immobilizes it, which allows us to get microscopic level resolution on our image, but also maintains the distance in the margin. So a lot of intellectual property and R&D effort and energy has gone into making that. So, and that can only be used once per patient. So that's a
Once per
recurring
patient.
revenue
Okay.
stream. Yep.
So that's like the razor blade of the razor blade model.
That is correct. That
Okay.
is spot on. And then the next piece, so it's, we've been developing this technology since 2013. So it's, we've acquired a mass of images that can help train new users, help onboard them quickly. So we call this our imaging atlas. So you have, if a surgeon says, show me what a, ductal carcinoma in situ looks like in a dense breast with fibrous tissue, we can say, all right, yeah, here's a slide of what our image looks like versus histopathology, something they're a little more familiar with reviewing. And it really kind of helps to give surgeons confidence and get them up to speed and effective as quickly as possible. And then on the last pillar on the right, this is what we are extremely excited about, is we're in clinical validation of artificial intelligence to help breast surgeons interpret these images. So as we move from more traditional capital consumable medical devices business with the S series, as we move on into the artificial intelligence, which is image assist is what our software is called. This is where we derive, tissue specific, software as a medical device revenue streams. So the artificial intelligence we have in clinical validation, the surgeon would do the scan, a breast surgeon would do the scan, and then the machine learning algorithm can quickly identify parts of the image that are suspicious for being breast cancer. So instead of looking at 100% of the margin and only interpreting on your own, you get quickly directed, like a Google Maps, if you will, directed to parts of that image that look suspicious, and you kind of have an instant second opinion from the machine learning algorithm, and that's trained on hundreds of breast cancer cases and thousands of volumes of images. So it really. We believe the results will show that it will improve the workflow two ways. One, the surgeon review will be faster, so that 5 to 10 minutes can be even quicker. And two, they'll be more effective. So our early indication or early data would indicate that you're both increasing sensitivity and specificity by having the algorithm, as
it's collecting more data, it's just getting smarter.
Exactly right. Yep, that's exactly right. So classic machine learning, the more data we get, the smarter it gets. The more diverse data we get, the smarter it gets, and it'll just continue to improve. So.
Okay, so I want to back up and highlighted something here that you mentioned, and that's the fact that really this isn't just for breast cancer. That's where you're focused right now, but that this opens up to any type of cancer. Am I right?
That's exactly right. I'd say any solid cancer, right? So there's two. We believe our TAM. We've got two paths for expansion. So there's one path that is into other tissue types. So margin assessment is a problem in basically every solid cancer. So prostate, colorectal, esophageal, kidney. Anytime you want to preserve organ function, by preserving healthy tissue as much as possible, you have to think about margins.
What about melanoma? I mean, is that something that's possible or no?
It is possible. So melanoma is a great example. A lot of people are familiar with what's called a Mohs procedure, and this is what I think helps distinguish where our competitive advantage lies versus doesn't lie. So in a melanoma procedure, you're looking at a very small piece of tissue. And it's skin tissue, so you can easily freeze that tissue. So what happens is, one of the kind of substitutes, if you will, for what our technology does is called frozen section pathology. So basically, that in the case of a breast cancer or other larger organ surgery, what takes 2 to 7 days for pathology in melanoma could basically be done in the 5 to 10 minute time frame. So so we're not as excited about melanoma because, the traditional pathology, the time to wait for that information is, there's a substitute for our technology.
Right. Got it.
That's why we're far more excited about, areas like breast cancer, which, if they tried to do frozen section, you've got a very fatty piece of tissue. You'd have to destroy the tissue to put it under the microscope. You're adding 30 to 40 minutes onto the procedure, and you also need to have a pathology lab somewhere close to the operating room, which is not the case in melanoma.
Okay, so you are cleared for cancer.
We are cleared for any human tissue evaluation. So
okay, so that opens up a whole heck of a lot, right?
That's exactly right.
Lot. And what did you say the total addressable market is about?
It's $3.7 billion. So yeah.
3.7 billion.
Yeah. So we've only talked about one of our opportunities for expansion, which is other tissue types. Some of the other exciting opportunities are across the continuum of care. So the reason S series is called S series surgery series is because that's only one part of the workflow that we think we can contribute to. There's also upstream in radiology. There you go, perfect. So the gray parts of that pie are other parts of the workflow. So in radiology, you've got needle core biopsies being done. So being able to give an instant kind of optical biopsy to the radiologist is a big win, helping them ensure they've penetrated the targeted lesion. And then downstream in pathology, I call them our secondary champions right now because, they're the process of moving that tissue from the operating room to the pathology lab is an opportunity for confusion or error to come up. And what we do is effectively we give a gross microscopic assessment of that entire specimen in the operating room so that the pathologist has something to compare to, right? And we already said they need to sample that specimen. So being able to see our image and say, okay, I want to sample that part of the specimen because I see something I don't like on OCT is a big win for them.
Right. So if I'm an insurance company and I'm just thinking out loud, why wouldn't I almost mandate, if I could, that this is the procedure that's used, right? Does that make sense?
It makes perfect sense. So I think if you consider the economics of what's happening, I already mentioned that patients who have to come back for another operation have $16,000 of additional treatment costs, and you've got about 1 in 4 patients coming back. So for insurance companies, they're effectively paying $4,000 per patient in this avoidable reoperation cost. And that's only the hard dollars and cents. That's not any of the soft cost around pain management and cosmesis and all the stuff I mentioned earlier. So for the hospital to acquire perimeters technology, it only costs you $1,000 per procedure. So, from a payer's perspective, an insurance company perspective, I am investing $1,000 to potentially avoid $4,000. It's only a 25% reoperation reduction to break even. It's a no-brainer. You're exactly right.
Right.
Now in the, healthcare is probably the least free market industry we have in the United States, but so there are lots of different, distortions and regulations that make it difficult for the people paying the bill to influence. But that's where, fortunately, our surgeon base, they really care about their patients, and avoiding one reoperation is enough for them to say, I want to use this technology, and then effectively the economic savings are just even better. I call it the triple bottom line. I call it the triple bottom line. We're good for patients, good for providers, and good for payers.
It's a win-win-win, right? The patient has a better quality of life experience. The insurance company is protecting themselves from Yeah, and the patient they're covering from having to go through undue trauma of going through a second surgery. What's that worth? I mean, I don't know. Got to be worth something, right?
Definitely, definitely. As a consumer of healthcare, it's worth a whole lot to me. I can tell you that. So.
Right, right. Okay, so estimated payer savings per patient is $856. So you just recently had what I thought was fantastic news, and I will never say that typically about financing deals.
Yeah.
Because most financing deals are not friendly. I mean, they might act friendly, but they're not. But you guys just had Social Capital take a pretty sizable position in the company. And if I'm not mistaken, it was priced above market, which was, if I'm going to see a deal, that's the kind of deal. Now it had warrants. It did have warrants, and I'm not a fan of warrants, but where those warrants were priced, I could sit with that. It felt to me more like a partnership than just a financing arm. So maybe you could talk to me a little bit about the Social Capital thing and what your view is on that.
Yeah, talk about a transformational event for Perimeter that could not have come at a better time in our journey as a company, our life cycle. So, we are at a transition in our organization where we just reached commercialization on our S series. So we announced our first patient in, our first commercial installation in December. And then we're in clinical validation on the AI, but we really need to supercharge that part of our business. And we're also kind of thinking about what's next, between whether it's other tissue types or other parts of the workflow. So to have a partner like Social Capital come in at this time is really exciting for because of a few different aspects. And you mentioned the pricing on the deal. And yeah, I'm just given the dynamics that we were going through in the capital markets at that time, extremely proud of where it was priced and the terms we were able to get. But, it's similar to my story joining Perimeter. I'd say this is a match made in heaven for Social joining Perimeter too. So from their perspective, we fit squarely in their investment thesis of allocating capital to improve lives and do good. Now, what I'd say is historically, they've invested that in kind of tech disruptions and things like that. So they're looking a little more in earnest at focusing on healthcare and allocating capital towards healthcare, which is, kind of exactly the opposite of where we're going. Is we know healthcare really, really well. We know medical devices, but we're branching more into tech disrupting healthcare and artificial intelligence and everything that's bringing to our space. So to have them bring their, AI, machine learning, technology expertise to our story, and us bring our healthcare and, tech disrupting healthcare through us, part of our equation, to their portfolio, it was fantastic. And, like you said, this is a sizable stake. So I think, from a capital markets perspective, they've made it very clear that they're in this for the long haul. We've been through operational reviews with the team already. They have a board appointment that they're working through, figuring out who they want to appoint. And, this isn't, just based on the amount of the company that they'll own post money, they can't trade. They literally can't trade without early warnings and things like that. So I think, from a signaling perspective, a huge signal to the market that, they believe in this company for the long term.
So I'm just going to ask, did you pursue them or did they pursue you?
Oh, I'd say it was a little serendipitous that it went both directions. I'd say
Okay.
for the reasons
little serendipity in there, huh? That's pretty good.
Exactly. Yeah, we'll take it. Yeah. So
that's fantastic. So when of course they have X amount of shares, but they're opening up because I know he's a big tech guy. I'm trying to think of
Chamath.
Yeah. So he's opening up his AI and his tech play. He's bringing guys over to help you out in that area.
Yeah, even I mean, even through the diligence process, they were already, asking questions and helping us think about things differently, and how could we create value differently with our unique data set and our AI applications. So yeah, I think that part of our business is ready to be re-energized and re-engaged, and having outside expertise through a capital partner like that, yeah, I'm extremely excited about the prospects.
All right, so let's talk. So the last time that I spoke with you, you were pretty excited about the team that you were putting together, right? I think you
Yep.
put it. So why don't you tell me about some of the key players that you've brought in that are going to help, move this commercial launch ahead?
Yeah, so I'll start with our chief commercial officer, a guy named Steve Sappett. He joined us directly from Hologic, which is one of the preeminent names in women's health. He joined Hologic through their acquisition of a company called Faxitron, which is basically selling X-ray machines to breast surgeons so that they can confirm they've removed any of the navigation material from the patient. So this is a kind of a liability avoidance use case. So prior to surgery, to help them with guidance while they're actually navigating the surgery, they would put either a metallic clip or guide wire or something like that into the patient. Then they x-ray the specimen on the backside of that to make sure that they've removed everything they put in from a retained foreign objects perspective. So this is a guy that basically, he was the national sales leader for Faxitron, grew them from, effectively their startup days to an install base of over 7,000 units and a strategic exit to Hologic. So, he knows the player, he knows our call point inside and out, he knows our sales cycle inside and out, and has a significant network around. There
So this is, I'm just bringing up Hologic's chart just so people can just had an idea. But back in 2003, this thing was like $15. Just hit 85 not long ago. So that's not a bad run.
Not a bad run at all. I would agree with that.
And that's okay, because we're sitting in this one over here, which is even going to be more fun, right?
That's right. That's exactly right. And and what I would say, about the offense that Hologic runs, it's you've got a lot of Stryker alumni there, if you will. So we know the offense. We know how to win in medtech, and Hologic is just another example of that. And we think we've got the business model that can help create the same kind of economics that those organizations have. So, this is just, this flagship product in breast cancer surgery is our, just our beachhead market. And, we have a business model that, the more that install base grows, the more our gross margin expands, the more our cash flow expands. And there's a ton of innovation happening right around our core portfolio and our core technologies. So as we think about, internal innovation and external innovation, we've got a ripe hunting ground out there once we're ready for that.
So the AI component that's still going through its testing, right? Once that is completed, that becomes more of like a software as a service, correct?
Yeah, that's
like
exactly
a recurring
right.
revenue model, right?
That's exactly right. So, it's becoming a little more trendy to say software as a medical device in our world, but effectively software as a service. Yeah. So actually our whole go-to-market strategy is what I call a managed solution agreement. So, we don't want to be transactional with these hospitals. Hospitals don't want transactional partners to begin with. So what we are helping them to achieve is a margin management solution. So it's not just buying consumables and buying AI. It's, we are helping you to avoid, reoperation problems because of margin management. So that's what we drive with our customers. So, and you're exactly right. So, I mean, the same thing holds true to any margin, right? Whether it's breast cancer margin or, any other solid cancer margin.
Speaking of margins, What?
Different kind of margin. Huh?
Just a different kind of margin, but let's talk
Yeah.
margins.
Yeah, definitely. So we're in the early stages of standing up manufacturing and that kind of stuff. But we have a path, which is with the kind of dynamics I just described. So we've got a single-use consumable and a artificial intelligence software, and I think you can anticipate the kind of margins that you would see in a medical device company with that kind of story. So
So you're gonna dance around that then, there, Jeremy. Good job, bro. I like the way you did that. It was good, but I
yep.
have a feeling the margins are going to be pretty darn good once you start, gaining some traction, getting some units placed, right? I think the margins I think you're going to incrementally start to see improve, right?
Yeah, definitely. I think, once we're at scale, from a gross margin perspective, you should be seeing the high 70s, early 80s kind of numbers from an organization like Perimeter, and ultimately dropping through, something in the mid 30s to early 40s EBITDA eventually, right? So that's what our business model can create.
Right. Okay. So we got the COO, and then who else did you bring in, Jeremy?
We brought in a new vice president of clinical and medical affairs named Dr. Sarah Butler. She joined us from IBM Watson, which this is pre their sale, and a long time both in the investigator world, but also in the industry side of the business. So really could not express more pleasure with what she's done on both the clinical affairs and the medical affairs side of the business, and her background from IBM Watson on artificial intelligence applied to imaging, and just really supercharging the clinical side of the house from a publication perspective and a claims perspective. Thrilled to have her on the team. And
you got some pretty strong board members too, don't you?
We definitely have some pretty strong board members. So, I'll talk. Aaron Davidson is our most recent board appointment. He is the senior vice president of corporate development at Profound Medical, which is a prostate cancer, robotic assisted prostate cancer company, and he brings both an operator perspective and a capital markets perspective. He was with HIG Biohealth prior to his time with Profound, and probably the most relevant overlap is he was a large investor in Novadac, which I was part of acquiring with Stryker, and that is a breast fluorescence imaging company. So, part of he helped manage that, or has sat on the board of that company, or helped develop that company into its strategic exit to Stryker. So great overlap there. Suzanne Foster is, probably what I would call kind of our largest commercial representative on the board. She was vice president general manager of Medtronic's Transformative Solutions business, which is selling new technology to breast surgeons to think about different ways to approach the procedure. You
got a pretty deep bench, don't you, Jeremy?
yeah. Maybe just to give the punchline on that, I've looked at a lot of little companies like Perimeter and little today anyways. And what I can say is, for the stage of our life cycle and the stage of the organization, I don't know if I've ever seen a technology and company be able to attract a level of talent that Perimeter has attracted. It's really, I can't say enough about how excited I am about the team.
Listen, I have to tell you, it's to me, this is such an exciting. So when are you anticipating that you're going to get some data or feedback from? I mean, what process do you have to go through still with the AI?
Yeah, so we're at the clinical validation phase, which means we need to execute a clinical study to provide the data for a marketing application to the FDA. So we just started enrolling patients in December at our first clinical site. So we're getting that up and running. So I think, we should have some visibility to data in the back half of the year. And, we would look to, get our marketing application submitted, either late this year or early next year or something like that, to get that done for clearance. So
Okay.
with the goal of having, the AI on the market early next year.
Okay. So how many, you've got one unit placed right now, or is it?
One unit place. We've announced one placement out there.
Okay. One's a good start, right? You always got to start with one.
You got to start with one. Definitely.
So do you feel as though you've got some things that are going to, put some, I mean, now that you've gotten this, my dog is going nuts over here. She wants to be part of this meeting so bad.
Yeah, let her in. I'm a fan of, I'm a fan of dogs. So.
She's a pain in the neck. All right, come on.
Hey, is she the alpha wolf or what?
Yeah, she's an alpha. She'll be happy now. She just would not leave me alone. I couldn't concentrate. Okay.
Well, definite lap dog you have there too, for sure.
All right. So do you see, I mean, now that you've kind of got this financing thing behind you, right? Now you can just focus on execution, right? I mean, I would think that's where you're at right now.
Definitely. So that, we're focused on execution operations, and that really allows us to, what I would say is accelerate a couple of different initiatives so we can, go a little stronger on the commercial organization, put some more feet in the street, get the word out there. We've got a very busy trade show season that happens in the first few months of the year. So looking to make a big splash at those this year. And then, on the flip side, like I said, we're at a transition from an R&D perspective that, we're not 100% focused on getting this breast application out there to the market. So now we can think about expansion into other tissue types and expansion across the surgical workflow. So, thrilled to be able to invest far more mind share on operations than fundraising, for sure.
All right. So if you were to right now today lay down 6 things that, look, if we accomplish this in the next 6 months, I'm very happy. What would those 6 things be? No. Hold on. Come on. Get in there. I mean, I try to be patient. I try to be the nice guy, but sometimes you're stubborn, man. All right.
Yeah.
So,
well, it's not about you, Tim. It's about her. So.
Yeah, I know. Believe me, I know. So
I have a Chesapeake Bay. I was just gonna say I have a Chesapeake Bay Retriever, so I know.
Oh, do you?
So yeah. So,
they're awesome. I love them. There's no better thing in the world than an awesome pet. But wow. Okay.
Yeah. So 6 things. I just touched on one, but so first and foremost, commercial progress. So building out the sales team and then actually continuing our installations. And what I've said about 2022 for us from a revenue perspective, if you will, it's really building the foundation for the future. So we need to expand our key opinion leaders. These early commercial users effectively need to become, I kind of describe it as the train the trainer phase. So, we get these early installs at the right institutions. We're not focused on how many, we're focused on who and where we have these installations, and then they become our evangelists of the technology once we open it up after the AI comes. So that's maybe that's number 1, 2, and 3, I'll say right there. And part of doing that is winning in those trade shows that I just mentioned. So we've got our existing thought leaders and key opinion leaders doing poster presentations and how I do it kind of training events at those, and that's a big opportunity for us to get the word out and have people have surgeons hear directly from their peers that are using the technology in the OR and on how it's changing their practice and impacting their patients. So that's a big big step for us. Obviously we need to execute clinically on the artificial intelligence study. That's a huge value creator for us. Now, like you said with biotech, this isn't a phase 3 binary study for us. If it's positive, that's great news and it accelerates our value creation. But if it's negative, we still have, the S series commercial execution,
Right.
de-risk story. So, so that said, we believe we've done as much as we can to de-risk the results in that study through, significant training. We're extremely excited about the results from the algorithm post-development. So we're going into it very bullish. And then next on the list, I'd say R&D. We've got to start thinking about what's next and allocating, resources and energy into that space. And fortunately, being out there in the market with the S series, which is a general tissue clearance, we're already kind of getting pulled in directions from surgeons saying, okay, well, I use it on breast, but I also do general surgery. So how do I use it over here? And that's great commercial feedback that we didn't have 12 months ago. And then, lastly, I'd say from a capital markets perspective, it's squarely in our strategy to get uplisted to the NASDAQ this year in the back half of the year. So
okay, so that was going to be one of my questions there. You just answered it for me, which is uplisting to a senior exchange, right? I mean, it seems to be a thing you would want to do. I think you're probably more than capitalized now to meet the qualifications of the uplisting, right? The only thing that I would say is if you're going to uplist, don't just uplist when things are looking strong and getting stronger, right? Because the last thing you want to do is spend a whole bunch of time trying to maintain your NASDAQ uplisting, right? Getting into that battle of staying above X, whatever dollar it is. It's just a pain in the neck, right? So hopefully your strategy is, yes, we're gonna, but when it makes sense, right?
Definitely. And I think we've already proven that strategy. There's been a lot of pressure throughout our public journey to upgrade to a senior exchange, even in if it was a senior exchange in Canada still. But what we've said and what we continue to believe is we want to have a strong story when we get to that senior exchange. And I think one of the elements, particularly of being a medical device company, is being able to put operational wins on the board, and having, we still won't really be a P&L story in 2022, but, progress from an install base, progress from a clinical study, it's much more fundamental and operational than kind of a blue sky biotech kind of story, right? So.
Okay. Well, listen, I just want to talk about the chart for a second here. And then I think we could talk about how many total shares after this deal. How many shares fully diluted outstanding after this?
Yeah, it'd be high 80s fully diluted. So
what's that?
High 80s.
High 80s.
Yeah.
It's still under 100 million, right?
Correct. Yeah.
Okay. So did you guys do was it a reverse merger?
Mm-mm. Oh yes, reverse merger. Yeah.
It was reverse merger over. Yeah. And when did you guys do that? Back here in
June of 2020.
Okay, got it. Yeah. That's why it was sideways for 10 years and then all of a sudden decided to go off to the races, right?
That's right. That's exactly
all right. This is the weekly time frame. So what we recently just happened from a technical standpoint is you guys hit what is called the double top, right, at $4. Right, you can see how it went up here. It tested 4, it failed, it pulled back, it came back, it hit it, tested it again, it failed. But you guys have what's called a golden cross. You should be very excited, Jeremy.
I am excited.
That is when the 50-day moving average crosses above the 200-day. That is a very bullish pattern. The opposite of that would be the death cross. So you should feel happy that you don't have the death cross right now. Okay.
I feel happy about both of those aspects.
If you look at what just happened though, so you were trading here. This is when you announced the deal with social, gapped up, right? Went and tested for, and then essentially what you've done since then is you came back down and you filled this gap, which is common, a gap fill, right? So you tested the 200-day moving average, and now you're bouncing, you're kind of holding and consolidating. Now, the entire small cap, micro cap space has been getting pounded for 9 months. This is not company specific stuff in a lot of cases, just the sector. So listen, where did social pick up shares? They priced them at what? I think it was $3, wasn't it?
3 Canadian. Yeah.
Yep, 3 Canadian. Okay. And it's now trading at 274. I think this is an interesting area if you're looking at the company to maybe start dipping your toe. That's just my opinion. I'm not telling anybody to buy the stock because I'm not a financial advisor, but they can put this on their radar. You guys have an investor relations page where they can come in and sign up for email alerts on Perimeter?
Yeah, that's exactly right. Yeah.
Okay.
It's perimetermed.com is our website. So.
Perfect. So listen, Jeremy, I want to thank you for coming in. What I want to do is maybe in a month or two, whatever, we'll do a little follow-up, just see how things are progressing. Have you bought any shares in the open market, just out of curiosity?
Sure have, yep. And I participated in the recent deal as well. So
is that right? Well, that's a good thing to see.
Yeah.
All right, Jeremy. I love this story. I mean, this is a feel-good story all the way around in my head, right? Because you're helping patients, you're helping doctors, you're helping insurers, you're helping everybody, right? It's a win-win-win. So why would you not want to support this company? Doesn't make sense. So
yeah, makes it easy for us to get out of bed and work on this every day. I can promise you that, for sure. So
Jeremy, thank you so much for coming in. I'm gonna unless there's something you feel I missed, I'm gonna go ahead and shut it down.
Sounds like a plan. Thanks for having us, Tim, for sure.
All right, thanks, Jeremy. Hold on a second. Hey there, fellow investors. Thank you for tuning in for another CEO interview here at Alpha Wolf Trading. Today was with Jeremy Sobotta from Perimeter Medical Imaging, ticker symbol PYNKF. I hope you enjoyed today's interview, and if you did, do us a favor, give us a like. How about giving us a share? While you're at it, why not give us a follow? Until next time, stay safe. Alpha Wolf Trading wishes you the very best of success.